Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COD data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong level of monthly historical structure for this market. In fact, if we look closely, what we can see is that this zone was acting as previous resistance here, preceding all these rejections to the downside. And after the market respected this level as resistance multiple times, it has now broken above the zone. So all this previous resistance is now turned support here. The market is currently testing this previous monthly resistance turned support. So there is definitely the possibility to see some bullish price action being created away from this level. We can also notice that from a pattern standpoint, we have a very clear impulse to the upside followed by this correction. And in general, after the impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the 0.32 Fibonacci retracement and the 0.5, so 50% Fibonacci retracements, are lining up perfectly with this historical level of previous resistance turned support. And this creates actually confluence of support because we have both the 0.32 and the 50% retracement lining up with the previous resistance turned support in the same area of price. Therefore, that area of price becomes a confluence of support zone, inside of which there is good probability of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. We can also notice that if we go and see what we have when it comes to the commitment of traders, so the COD data, so essentially what hedge funds and the big players in the market are doing, and we check the data precisely for gold, we can see how with the last reports, net positions have once again started to get increased. We went in fact from having 147.7k net positions up to 161.7k net positions. So inside of that confluence of support that we have just identified, institutions have just started once again increasing their net positions, so moving back to the bullish side for gold, which anyway is what you would expect. If a market is inside of a confluence of support area, you expect the institutional side of the market to continue or to start longing that market. We see in fact how with the last report, 9,400 longs got added from an institutional perspective on gold and 4,546 shorts got closed. So institutions have now started increasing their longs and decreasing their shorts on gold, therefore making it stronger inside of this confluence of support area. So keeping this in mind, let's drop down on the lower time frames and see what we have. Now, by the way, make sure to go and follow me also on my free Telegram channel, which you find here on the screen and also linked in description, so you never miss new updates and new content that I publish. Now, continuing with analysis here on the weekly time frame, it is quite clear that at the moment the market is trying to create and creating actually already this triangle formation. In fact, we can see how it has been creating lower highs, but at the same time it has been creating higher lows as well. And at some point, this market is supposed to break out to the upside because on the monthly we have support. So we have good probabilities of getting a potential break to the upside from this pattern higher than the probabilities of a break below, because on the monthly we have support, and because institutions have now been longing gold for quite some time. If we drop down on the daily time frame, what do we see? Now, here on the daily, we can see a quite interesting pattern that the market could be creating. In fact, if from here we will see a bit more continuation lower, that would be perfect because the market would create an M pattern. And in general, after the creation of an M pattern, what you could expect is a potential rejection to the upside, at least for the completion of the pattern at the neckline, so the previous support turned resistance. Therefore, if we will see a bit more bearish continuation for the market to go for a deeper test of the confluence of support that we have identified on the monthly time frame, that would open the way to see more institutional longing inside of the confluence of support, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. Therefore, if we see this push lower, what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to identifying early shifts in a trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish market to an intraday bullish market, at that point, I wouldn't be surprised to see the market create a potential rejection to the upside away from the confluence of support that we have previously identified on the monthly time frame. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.